We begin with the big after-hours action as earnings season kicks into high gear. Shares of Netflix, IBM, CSX, all on the move after reporting results. Netflix, the one to watch with less than an hour to go until its conference call gets underway. We've got full team coverage standing by to break down the results. Gene Munster's getting ready to fire up the red phone in Minneapolis. But we begin with Julia Borson live in Los Angeles. Julia.
Well, Melissa, Netflix shares soaring, now up more than 9% despite lower than expected guidance. Investors appear reassured by better than expected earnings per share, as well as better than expected international subscriber growth in the quarter. Netflix adding 6.3 million international subscribers. That's above projections, while new U.S. subscriber growth of 500,000 did fall short of expectations. But investors may also be reassured by CEO Reed Hastings giving some frank comments in his letter to shareholders about competition. This, of course, comes ahead of Disney Plus and Apple TV Plus launching next month. Hastings saying they've been preparing for this new wave of competition for a long time, writing, quote, "The launch of these new services will be noisy. There may be some modest headwind to our near-term growth, and we have tried to factor that into our guidance. In the long term, though, we expect we'll continue to grow nicely given the strength of our service and the large market opportunity." Now, the other bright spot that Hastings is stressing in this letter to shareholders is international growth. Hastings saying they're expanding their non-English language original offerings because they continue to help grow penetration in international markets. He says they've globally released 100 seasons of local language original series with plans for over 130 more next year alone. He also says they're on track to achieve full-year operating margin of 13%. And next year, they're targeting another 300 points in operating margin expansion. Of course, we'll have to see what else Hastings says in the Netflix video call that starts in an hour. Melissa, back over to you.
All right, Julia, thank you. Julia Borson in Los Angeles with the Netflix details. Let's go to Steve. You literally bought Netflix minutes before it released earnings.
Minutes before the closing bell, minutes before they came out and reported earnings. I knew it was going to be binary. I thought it was either going to be up $20 or down $20, and instantly was down $20, so I thought it was a losing trade. But I figured it would reverse either way, so I'm still holding the position. I saw 302 and 318 as resistance. I'm probably going to be out of it tomorrow if it holds these gains, which is a big if with Netflix.
Right.
Bonawyn was on last night, made his maiden voyage here on the options action.
Oh, yeah.
Pete, I don't know if you were watching, I did a fantastic job, but he talked about a move of this magnitude. And last night, and we've said it for a while, I get a lot wrong. We got this one right. We said, you know what, Netflix, given what happened a couple months ago, probably going to trade down 252. If it holds there, you buy it with both hands. You're going to flush a lot of people out. It's exactly what happened. And last night we said, to the upside, based on that move, you're going to potentially see 317. That's exactly where it traded up to. So 50% retracement of the May high, of the recent low, 317. This was a good quarter. I understand that U.S. is saturated. The international growth is great. But you start reading between the lines, the guidance wasn't fantastic. I think, in my opinion, you absolutely have to take the money and run now.
He characterized the launch of the various streaming service as modest headwinds, as it being noisy. And I was talking to an analyst today, and he said, you know what, it's not going to be the fourth quarter, the fourth calendar quarter, where you're going to see the toughest competition. It's going to be in the first quarter and second quarters of next year when people actually get the services, they can compare, and then they actually decide what they're going to do.
Until they get some traction, right? How long does it take to really get Disney Plus out there and sort of, fully, you're going to have a bunch of big subscriptions at the beginning, right? So they'll both do, Apple do big pushes, but, so we're not really going to have a sense. I mean, there was a lot to like about this quarter, primarily that expectations were so low going in. So that was sort of interesting. I mean, for me, too expensive, can't be long it, competition's coming. I know Pete's been long it for a long time. I mean, what do you do? Do you sell on this now?
I just keep selling calls against the position, and I'm going to have to roll these calls again, Mel. But that's something I've been doing for a while now, and I think the focus, at least by the reaction we're seeing right now, is the focus that I think should be there, which is international.
Right.
I look at the 60-plus million that they've got U.S. right now or in North America. I don't know how much more they can get from that. But if the international continues to grow, which so far it has been, and that's been the outperformer for them, I think we're focusing on the right thing there because, and Reed Hastings talked about, hey, there's going to be some short-term, there's going to be some headwinds, obviously with all these launches of everybody else, but they've got a pretty good head start. And when you look at the international head start that they've got and all these languages, you talked about 100+ different languages that they're putting out there. I think India is going to be the key right now. And if the day ever comes that they're able to get into China, that could be something very, very interesting.
And how about the key, though, of how they fund the new content? So that's going to be a question. Do they continue to raise prices? Is it going to be
can they raise
prices in the face of Apple at 5 and Disney around that level too? I do believe I'm going to hold Netflix, not the stock maybe, but the streaming service. I'll probably own Disney and I'll probably own Apple. I don't know how many
streaming services, not the stock.
I don't know exactly. I don't know. But by the way, I own 2 out of 3 of those. I don't own Disney, but I will own the streaming services.
Right.
But how many other people are going to afford to pay for 3 or 4 of them?
But I just look at that content that they put up and I just see, oh my God, that's hugely expensive. You know, talking about all the local content, I think, wow, okay, we are in for a massive continual spend. It's not like, where they're spending to build and then that's it.
Right.
You've
the
built
cost
the content.
Of doing business for Netflix is much higher than, say, a Disney, which may already be building off of a stable of content that appeals to people around the world. Yeah. Right?
No, 100%.
So this is the cash burn story. Once again, it comes back to that cash burn story.
That story's been here the whole time.
Yeah,
I mean, nothing's really changed.
Except that the competition has changed.
The competition has changed.
Right.
And that's the reason why I think the stock went down to 2. We mentioned it last night because last quarter, for the first time in a while, it seemed like Reed Hastings was actually concerned about the coming competition. And he had never been before, at least in my recollection, in terms of prior conference calls, he actually seemed concerned. Flushed a lot of people out. Now that's out there. So that moved to 252, got everybody out. Now what you're seeing is everybody piling back in. I think this is an opportunity, and Pete can speak to the options again, to take money off the table. This is a textbook 50% retracement of that spring high and
by the way,
low.
Before Pete gets in on options, the level that Guy's talking about at that 252 is $20 above the December fall off a cliff 2018 level where Netflix traded down to. So that was an unrealistic level, 231. So when you start to test lower levels, you start to get a little more bullish. It's all about positioning. This trade that I made today was just about the fact that the stock was down 30% or over 30% from July. It was all about positioning for me.
Yeah, the last quarter was awful. 25%, 30%, whatever it was to the downside. And obviously, everybody seemed to be ratcheting down either their price targets or whatever. And everything was negative going in. So the positive was when they had those international numbers that were strong, that seems to be what everybody's reading right now.
Sigh of relief.
Yeah, sigh of relief that they're still there.
Right.
They're still treading water. And how much longer? I think there's a few more quarters because this will take some time for the competition to actually start to get after them. So I wouldn't say that this is a huge long-term hold for me, but I've done okay with this thing, selling calls every month for the last year and a half or so, and I think I'll continue to do so.
Sounds like the trade's going to be volatile in the next, 2, 3, 4 quarters.
Or 4 hours.
Or 4. Well,
literally, right?
You've got that video call, that weird video call where they take questions that are pre-selected or whatnot.
We're going to have a much different conversation tomorrow at this time, no question about it. But again, I think this is one of those stocks where you have to trade the stock, don't let the stock trade you. And I think to trade it now is to take money off the table off this, what has been a pretty significant move over the last 4 or 5 years.
You cannot be married to this stock.
No.
I mean, when you look at the valuation alone, the PE alone, you cannot be married to it. You've got to trade this thing aggressively or you shouldn't be in it.